Hello investor, welcome to The Awakening, where knowledge is key to your trading destiny. Today, we're going to delve into indicators. Indicators are divided into two groups. We have lagging indicators and leading indicators. And of all of these groups that are listed right here, none of them are bad. All of the indicators are mathematical formulas that analyze what the quotes are doing now in comparison to the past, deriving certain patterns and giving you a higher probability of good entry point in comparison to trading without an intuition. How to know if these indicators are leading or lagging? Because lagging indicators are doing much better in the volatile market conditions, while leading indicators are doing better signals during the flat market conditions, when the candles are not big, when the market is going sideways. So having said that, the way to easily distinguish between them is indicators that are under the chart, like CCI, which is a commodities channel index. It's usually range-based between positive 100 and the negative 100 as seen here. They're the ones that are going to be opened under the chart. So if you take a look at CCI, for example, also shaft trend cycle, it's also range-based, 75-25 as the settings. You see that it opens under the chart. So under the chart, under the graph, indicators are usually, but you could say, leading indicators. The indicators that are superimposed on the chart, like chaos fractal bands, are the ones that are considered lagging indicators, right? They're the ones that are superimposed on the chart, and they are the ones that give signals when the candle closes. Today, we're going to take a look at the easiest probably indicator, in my opinion, which is Parabolic SAR, and essentially the easiest other leading indicator, the CCI. We have graphical tools here to help us determine if the entry point was good or not. We're going to use the vertical line. The Parabolic SAR gives a signal for a purchase or a sell, for a buy or sell position when it switches from bottom to top. This would be a sell. When it switches from top to bottom, this would be a buy. So right here, when it switched, when the market started to go upwards and it came close to the indicator and it switched to the bottom, it would have been a good buy position based on the Parabolic SAR. It continued to go, and right here it switched direction, right? So it switched from bottom to top, and that was your signal to sell. It's not ideal because here it would have been a losing trade, because here it switched to the bottom, giving you a signal to buy. But the second time it switched, in this case, this would have been a second step of martingale, the money management that I will discuss in much greater detail with you next video. This would have been a winning trade covering the previous losses, and you still would have been in the profit. Here it was a buy position on this candle. As you can see, in the next one it was green, so you should have been in the money as well. Now, let's cover this up for just a little bit and go back to the CCI. It gives signals actually very easy to understand as well. When the line goes from somewhere in the middle and it touches the negative 100, like it did right here, it would have been your sell signal. You should have, and you would have seen that you would have been in the money on this one. Once it goes back inside and touches from the inside the line, the negative 100 once more, right here, once again, your sell signal, as you can see, would have been in the money. When it touches the line, positive 100 or negative 100, this indicator kind of tells you that there's a high probability that it's going to continue to go upwards in this case, or downwards in this case. And as you can see, it's not always 100% accurate. In this case, we would have opened a buy position, and as you can see, it started going downward. But in here, it touched upwards, the positive 100 should have been in the money. It came back down, touched it again here. This would have been probably a losing trade. Touched again here. This would have been maybe a 50-50. But in this case right here, third step martingale, you would have covered the previous losses if you should have incurred them. and would have been back in profit in this on this signal right here. This signal right here also is in the money. Here we would have been maybe 50-50 depending on where you open this position. But on this one, you should have definitely been in the money. So having said that, usually, because the market can change positions or volatility very quickly, the experienced and successful traders use multiple indicators to give them a good signal. For example, here you have not only CCI tell you that it's a good time to open the position, but Parabolic SAR as well. If you have several indicators, maybe not 2, maybe 3, maybe 4, maybe 5, 6, too much is also not really good, then becomes a little too cluttered. But if all of them give you a good signal, then once again the probability for a successful trade improves. Conclusion from today's lesson, my dear friends. Once again, leading indicators are doing better in the flat market conditions. Lagging indicators do better in the volatile market conditions, but none of them, not singularly or combined, can guarantee a 100% success rate. Next video, we will see about not needing a high success statistics to make money. All you need is a proper money management. Stay informed, my friends, stay empowered, and every trade is a choice in the path to mastery.